Welcome back to another video where today we'll be going over order blocks and breaker blocks. So let's dive right into it. What is an order block or a breaker block? And it is basically an area like a fair value gap where buyers or sellers have a bunch of orders placed. So we can view my chart right here. So when we're looking at order blocks, Jack and I both use indicators. So I use an indicator it is called right here. It's order blocks and breaker blocks by Lux Algo. And this will basically mark out any order blocks for you. And I think Jack uses the smart money tool indicator, which I think he covered in another video. I think the fair value gap video, I don't know what video, but he mentioned it somewhere. So when we're trading, we look for high time frame order blocks or breaker blocks. We don't look for a 1 minute, 2 minute, 3 minute, or 5 minute, because when we do, I'm on the 15 minute right now, but I'll click on the 1 minute. We can see that there are order blocks everywhere, and basically these colorful boxes, orange, blue, green, these are all order blocks. And when you're trading with this indicator on, your chart kind of becomes a mess. I don't recommend you trade with it on all the time. So when you're looking at the chart, when you're marking out fair value gaps, when you're looking for liquidity sweeps, blah, 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 when you're looking for all that stuff, I recommend you have it off. So we haven't gone over our strategy yet, but I think it's in a couple videos. If you haven't, you're not gonna have watched it yet because it's in 2 or 3 videos. But anyways, when you're looking for a trade, you can have it off. Mark out all your confluences, fair value gaps, blah, 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 blah. And when you think when you're ready to enter a trade, I would go to the 15 minute, possibly the 5, but the 15 minute usually. Turn on the indicator. See if there's any order blocks. If there is a high time frame order block that goes against your trade or goes against your bias, then you have to be aware of that, and vice versa. So say there's a 15 minute fair value gap. Let's see if we can find one right here. Okay, boom, on the 15 minute. We can mark it out because we've gone over this, so you guys should understand this by now. Say there's a 15 minute fair value gap. When price is moving up, you can turn on the indicator and you can see that there's also an order block right here. So this whole area is areas where buyers and sellers have orders placed. So we expect to see a really strong rejection in this whole area. So we can use this as extra confluence when taking a trade. So we go to the 15 minute, go to the 5, blah, 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 blah. You go all the way down, look for an inverse, look to see if price is rejecting off this area and take a trade. So order blocks, they aren't as important as fair value gaps when taking a trade because we don't use them for lower time frame, but they are a good area. So say you find it's New York AM, you're looking for a trade and you find like a 5 minute inverse and then you're like, wow, this looks like a great trade. Let's see if there's any order blocks. If you see a 5 minute inverse and you see an order block, like right here, see this orange, there's a 5 minute order block right here. You see a good trade and you see a higher time frame order block where price is rejecting off of. Say there was a 5 minute fair value gap right here and then price was about to inverse. This would be good because you see that price is rejecting off an order block. That is a confluence that we can use. If price is rejecting off a high time frame order block, that is a confluence. That is extra confirmation that price is going to move in your direction. I know we didn't cover breaker blocks yet, but basically a breaker block is the order block version of a inverse fair value gap. When an order block is inverse, it creates a breaker block, and it works the same way an order block would, which is price will reject will reject off these areas, because if a breaker block's inverse, then it's gone. It's the same thing with an IFVG. There's no inversion breaker block because the breaker block already is the inversion. So let's just hop into this little example right here. So see here, boom, price taps into this order block, bounces off it, have all this movement down here, go down, 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 take out this external liquidity that I actually have marked out from the previous video. It's a pretty nice example actually. So price hits order block, takes out external liquidity, and then moves back up. And usually I've noticed this when I'm trading, and I'm sure Jack has too, but with high time frame order blocks and breaker blocks, you tend to see price tap into them only once. You only tend to see a strong rejection once. So order block taps in, boom, strong rejection. Price goes down. When price goes back up, we don't expect to see another strong rejection down. We expect to see an inversion in this case. So when price goes down and goes back up, inverses this order block. This dotted green box is a breaker block. So let me see, we get the breaker block. This now acts as the same area, or an area where market buyers and sellers have orders placed. So in this case, there happens to be another order block right above this breaker block. So we inverse it, tap into the order block, boom, movement down. And with this move, since the next kind of area pool of liquidity is this breaker block, we tap into the breaker block, like I said, once, tap into it once, and it goes back up. And just like I said, price does not reject again off this order block. It ends up inversing it. That's not a known rule, but that's just something from chart experience that I've seen happen all the time with these higher time frame order blocks. So inverse this order block. See green box, green dotted box. This is now a breaker block. We go up, New York PM session. We don't trade PM, but whatever. Liquidity is probably swept here. There's probably some higher time frame FVG order block, something here. Price ends up going back down, and then we see the breaker block tapped. Boom, taps once, goes back up. So this is the market's close. It's Saturday right here, or it's Sunday. If I had to guess, and if I was a betting man, which I'm not, when price goes back down, I expect it to not bounce off this breaker block because we already bounced it off at once. Something that's not a rule, but I've seen it a bunch. So just to give a quick rundown again, order blocks, Jack and I, we'll go over this in our strategy video. We don't use lower time frame order blocks, so the 1, 2, 3, 5, or sometimes the 5. We don't use the 1, 2, 3. We don't use the 1, 2, 3 order blocks to take a trade, but when we are about to take a trade, we will go to the 15-minute or the 5-minute to see if there's any order blocks in the way that are either aligning with our trade or contradicting our trade. And then we just have to be conscious of this when we are taking trades. And I'm pretty sure that is it.